U.S. markets hitting the pause button this morning on that Trump rally, a day after the Dow hit that new all-time high. Dow's up 3% since Election Day, despite all those predictions that a Trump win would translate into a big decline. Our next guest says, however, that investors have been too willing to ignore the president-elect's hostile policy positions, which have the capacity to dampen growth. Joining us, a post-9 Pulitzer Prize winner, New York Times columnist Jim Stewart. Jim, it's good to have you. Happy Friday.
Thank you. Happy Friday.
Immigration, trade, even deficit spending, which the Times looks at today, are not the focus right now.
Absolutely not. I mean, can you believe that we're actually sitting here talking about a Trump rally after all the predictions that it was going to be a disaster? But people are looking at the near-term stimulus. They're looking at infrastructure spending, they're looking at tax reform and tax cuts, and they're looking at deregulation. And those suddenly, everybody woke up and discovered, much to their surprise, that we have a Trump in the White House, and we have a Republican House and a Republican Senate, which means that all that gridlock for now is swept aside and something can actually get done. And what the House Republicans and the Senate Republicans want, and what Trump also seems to want, is tax reform, is infrastructure spending, and is deregulation. That's where they're going to agree. The danger things, which are really real here, I mean, the impact on the deficit, the possible trade wars, which I think are serious issues, they're longer term. We don't know for sure whether they're going to happen or if they're going to happen. And if they do happen, the impact economically is going to take quite a while to work itself out. So I think that's why the market investors see this as at least the glass is half full, if not more.
It's interesting how on the things that you think will work short term, like infrastructure, tax, people say, oh, it's a done deal. Those other things like immigration and trade, the answer is sometimes his bark is worse than his bite, right?
Well, some of that may be wishful thinking. I mean, he's got to have some bite after this campaign, I would think. He's got to deliver something to the people who are really voting for him over immigration issues. But that's not a slam dunk with his colleagues in Congress. I mean, they have to really work out some serious policy differences there. I mean, congressional Republicans, for the most part, are free trade and pro-immigration, not illegal immigration.
They've also been fighting infrastructure spending for the last few years.
They were totally hostile to it when Obama, by the way, with 10% unemployment, was trying to get some stimulus in there. They're totally against it. Now, we only have 5% unemployment, and I guess they're going to be all for it. But I have to say, I think we could all use some infrastructure spending. I mean, Trump was absolutely right about the appalling state of the airports. I mean, and he lives in this area. Look at New Jersey Transit, Long Island Railroad, LaGuardia. I mean, I could spend several $1 billion easily right here in the tri-state area.
What I like about the column, Jim, is that you call out the individual analysts on Wall Street that got this totally wrong. They said in the event of a Trump presidency, the market would plunge. I think you say that Barclays predicted 11 to 13% drop in the S&P 500. This is the exact same thing of what happened in Brexit. And the defense from some of these groups is that we haven't seen Brexit really happen yet. Well, we haven't seen Donald Trump in the White House yet.
No, I mean, I don't want to be too hard on the analysts because, like, we in the media, I've been getting beat up all week saying, how could you all get this so wrong? But there was a lot of groupthink going on. There was a lot of echo chamber stuff going on. Wall Street analysts were not spending much time in the heartland of America either, and I think they totally misread. They were looking at the same polls as everybody else. But I think they were wrong. I mean, I don't quite understand why they ever thought it was so bad. I mean, to me, the overarching thing is you can say, well, trade wars, this, the other, but the important thing is Donald Trump is a real estate developer. He is a pragmatist, and if he's got a Republican House and Senate, this is, on balance, very favorable for investors, for small business, and for business people.
To defend them a little bit, maybe, I mean, it's not just a Trump presidency, which seemed unlikely, but also control of the Senate, which certainly seemed in the balance, if not more likely to become Democratic. So suddenly you woke up with not just Trump, but a non-divided government.
True, but they were also saying that if we had a Clinton presidency and the Democratic Senate, we were going to get a rally. Now, that I didn't quite get either. I mean, that would have made Elizabeth Warren one of the most powerful people in the country. I mean, she's still very powerful, but she is like anathema to Wall Street, and yet this was going to enshrine her. And how about the tax policy of the Clinton administration? I mean, 7 layers of capital gains taxes. That's not investor friendly. So this whole thing kind of baffled me all along.
Some are pointing out on Monday and Tuesday, when it looked like Clinton's win was secure, Dow was up a combined 440 points. next couple days after Trump won, another 400 and some odd points. So maybe the market just wanted this to be done and democracy to function.
Well, the market historians, I think, point out something very valuable, which is if you look at 100 years of market history in presidential elections, elections in the longer term have no effect whatsoever on the market. Because they are political events. They may, over time, begin to have some economic consequences, but they are political. They do not change, for now, the unemployment rate, the gross domestic product, the momentum in the economy, consumer sentiment. All those things are what move markets. And so I wouldn't be surprised, by the way, if this sort of Trump rally dissipates a little bit, and typically you will get a bit of a pullback, and it'll all be a wash. We'll be back to where we were.
Sort of where we were 18 months ago, that's for sure.
That's true.
Jim, thanks so much. Good to see you. Jim Stewart.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.